Highlight for the day is going to be the word head fake. Not the word of the day, but a pattern head fake. What does it mean? Why is it important? And, we had almost every day, we have good calls of calling head fakes in places where there's stops that could come out or momentum breakout that could happen, especially in a market like the NASDAQ. That's the chart you're looking at. I run it on an 8-point figure, shows a little bit of rotation. Anytime you think of P&F, point and figure, you think of a bird in the sky. If left a trail, what would it look like? That's what we're trying to do when we read charts. We're trying to see the trail it left in a rotational way so that we could find the appropriate patterns to look for and not the, ones you might read in a book that you bought. Forget about those. Worry about the most important edge of all. And everybody should know this, and most people don't when they trade or invest. It's number one, all about location, but how do you pick good location and create good opinions? You got to keep an eye on the other side. You got to keep an eye on the market. Well, what's the market? It's other people's positions. That's what drives price. The faster a price goes up or down, the more people were exiting a position. If they're exiting a long position, they're sellers, and that creates downside. If it's quick downside, you could rest assured there was a lot of people who were long exiting a position. So exiting a position creates breakouts, creates momentum, creates tempo, and everything else. So it's important to keep an eye. And when reading a chart, chart isn't just about the time and the price a market traded. I mean, that's what it's plotting. But how do you read a chart? How do you, without trying to be too much crap over it and lines around it and oscillators and everything else? Like, that's going to be an aid to help you read a chart. Just get into asking the right questions. But if you're not understanding what the number one edge would always be, and that's other people's positions. When a market's too long, it'll tend to get heavy and bearish. If it's too short, it tends to turn and want to get strong. Too long, too short. That's what we're looking for. All right. Too long might be different today than it is tomorrow, but too long, too short. Think about that. After a lot of people are long, if there's too many people long, it's like too many people in a room and someone yells fire and everybody runs to the exit. Too many people are long, it's hard to continue to go up. Why? Because people who are long are sellers, and it's hard to go up if there's a lot of sellers. So the proper function of a market to keep it and make it efficient is it's constantly shaking people out. It's not doing it just to you because it hates you and people take it personal. It's doing it as a way of what it has to do in order to exist. All right. It's that circle of life. It's got to shake out weak hands. So if you look at this, we always try to, my eyes get fixated on a range, or what we call a congestion box. It means the same thing. I look at the middle of it. And I will say to guys, hey, if we get through the middle of this previous box right in here, the NASDAQ can get pretty weak. When it happens, it's not a good guess. Doesn't feel like a good guess. It's a predictive skill that I have, that I give to the room, and the room creates for itself to be able to watch a market. Even if they don't trade it, it's important to watch a correlated market. Most people in this industry on the futures side trade the S&P minis, the ES. But you have to watch more than just what you trade. All right. You have to compare and contrast. So the NASDAQ allowed us in this area to understand that it was going to get slippery through that particular price. And it wasn't a guess, or it wasn't arbitrary. And so you find areas where also a market like the S&P, or the NASDAQ rather, has the middle. If it could use it as support, the market didn't get through it, right? It looks for particular support in the middle of a chop or middle of a congestion box. If it can't find it, it gets slippery and there's sell stops below it. The other thing is a head fake, and we had a great one here. If you look at this is a longer time frame. When I say longer time frame, we went back 30 minutes, okay? The market got out of this box. Now, we don't know it's going to drop. All we're here to do is to predict. We do know that if it got through the middle of this, okay, and it gets through the middle of this bigger box, okay, that the speed at which it went down is probable for two reasons. Number one, it got through the middle of a congestion box where you could assume there are longs and shorts all through this box. Might be you too, right? Longs and shorts all through this box. Who starts to become under more pressure when you get through the middle of a consolidation range? Longs, if you get below the middle of a consolidation range, below the middle of consolidation range, more longs, we're going to get grapefruit eyes to look to puke it to the downside. That's one thing. Number two is if you look over your shoulder and look back at what the market just did, it head faked up. It gets people all excited. Oh, we're going up. We're breaking out. Let's get long. Let's get long. Let's get long. And if it goes up, they're right. But if they're wrong, they become part of the reason why it's a head fake. They get trapped playing the breakout, and most people who are wrong are terrible at executing out of being wrong, and they chase it. So that's the whole premise of the middle of a consolidation box, why it's important, what the whole notion of a head fake is, especially in a faster market like the NASDAQ, the important element of watching another market other than the one that you trade in order to compare and contrast to find value. Because as traders and investors, that's what we're looking for, value at the right time, at the right moment, looking for rotation for location, but look at or chart patterns to read it better. And the reason why you'll read it better is because you're following the number one edge we're all after, other people's positions. And when they get scared and are ready to get shook out, at some point, in order for a market to exist, it has to distill down into a healthy amount of people to go up and to go down. All right. If you have a beauty contest, at some point, you got to eliminate some people in the contest. Right. And if you don't, well, you're not going to have a contest. You're not going to have a winner. You cannot have too many longs open in a position and go up. You got to distill it down. All right. Keep that in mind when you're reading a chart and when you're getting better at it. If you don't know what the ultimate edge is, the ultimate goal, if that's still a question, or if you get it wrong, then you're going to be going down the path of chasing something that, while it might be an advantage, is not the most important advantage. You look to find and read what other people are doing. The emotions of a chart. If a chart could talk, would it ooh and ah and different things like that? That's what's important. And a lot of people miss it. It's not their fault necessarily, but no matter what instrument you're trading, could be a future, could be an individual stock, could be going buying a car. What do you think car dealers thrive on when you go into a car lot? Emotion. They know what your position is, and they probably got you emotional, even if you think you got all your ducks in a row. And so they're better at it than you because it's their job to read you than you to read them, right? Your job is to read the market by looking at a chart and trying to glean where people could be stuck, where they would puke, where these stops could be, and keep it simple. Most people get way too uh, deep into the complexities that are unnecessary. They think, well, trading is hard, so the solutions must be hard. The edge and the advantage is pretty simple. Where are other people positioned? And try to wrap your head around that when reading a chart and finding the chart patterns that give you the sounds. If it had the ability to emit sounds, the ooh and the ahs of people getting emotional and puking. On these YouTube channels, we do these highlights from something we talked about in real time in the trading room at tradinggroup.com. So two things: subscribe to this YouTube channel, and number two, visit the website. Because I had some people recently ask me about it. Figure I cover it in one of these highlights.